Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully all of you had a very nice day of trading today and a very good weekend as well. And in today's markets, guys, well, the bulls going on an absolute tear. No sectors getting left behind today. The pattern that we identified last week on the S&P in terms of changing into a daily uptrend and having some positive momentum in the markets did actually come into play as of today. The Trump flexibility news on the tariff announcements on Friday definitely helping alleviate a lot of the fears in the markets. However, with the broad market reciprocal tariff dates looming on April 2nd, is it a good time to chase these markets into resistance with such a big catalyst ahead of us? That's what we're going to take a look at in today's video. So, as a matter of fact, in today's video, first things first, we're going to go through our technical analysis rundown of our major market indexes, see how the rotation was doing today. Thereafter, we will take a look at our list of big tech names and see, even after the last few days of rally, are they still at very good valuations in terms of where they have been in the past? And lastly, guys, we will take a look at my portfolio for a few of the trades made today and just a general recap of which positions I have remaining into the end of the week. So it should be a shorter video than normal. Let's jump right into it, shall we? So the SPY up about 1.79 today. The Qs up 2.04, the biggest winners of the day, of course. And in terms of the heat map, well, the heat map looked very good. No major sector really getting left behind. Technology participating, semiconductors, NVIDIA up 3, financials coming back, healthcare somewhat mixed, but overall the index was up. Even defensive industrials and the bottom half of the market really participating in today's rally. It was more than not broad-based. Moving on to the one-day relative, you will see that even better. No major sector getting left behind, led to the upside by consumer cyclicals. And of course, the segment that stands to be the most affected by tariffs, well, when you alleviate some of that short-term fear in terms of tariffs, now, who's to say that whether or not the basis of that is justified, right? The flexibility comments that came in on the Friday session didn't really take away the looming April 2nd date. Is it just a little bit of a dead cat bounce in the markets? Is it a bull trap? Is it fears actually being alleviated? Well, maybe it's a combination of all three, but that sector definitely outperforming today. And the lowest performer of the day, utilities. On the 1 week relative, even with the last 2 days worth of bounce, we still stay somewhat mixed. A lot of the sectors in the green, but utilities, real estate, basic materials, and consumer defensives were down. Curious, this was supposed to be the rotation trade. When growth is faltering, everybody started pivoting to value, namely these four sectors, which technically do somewhat very well in the midst of the face of a recession. Now, with the recession fears somewhat being unwound, partially due to the Federal Reserve's comments last week, and also Trump's flexibility comments on the Friday section, those sectors have been seeing an underperformance in terms of rotation, potentially back to some of the sectors that got hit the hardest over the last 3 weeks. Now, moving on further, guys, in terms of the fear and greed index, you can see that we've now pivoted from extreme fear a week ago to now only fear. So the market's still somewhat fearful. Market momentum is still down in the drain as the last 3 weeks have been quite painful. Stock price strength, net new 52-week highs and lows on the New York Stock Exchange is still at somewhat relative lows over the past year's worth of data. Makes sense. We've came down so much. Not many names out there are hitting brand new all-time highs. And stock price breadth is actually coming back in a decent fashion. If you take a look at your stock price breadth indicators, well, now we have a very decent recapture, guys, in terms of percentage of stocks above their 20-day moving average, the short-term moving average, now back to 55% of all stocks. I was saying back here a lot, guys, that it was a good time to be buying the dip, at least with a longer-term horizon. I'm not saying the dip is over. I'm not saying we can't get a double dip and smash new lows in the next 30 to 60 days, as none of the really geopolitical uncertainties have been lifted. It's a nice short-term bounce, but it was a very decent first entry opportunity to go shopping. And now the momentum is coming back, at least in the short term for those names. Percentage of stocks above their 50-day moving average. Well, here's where you see the discrepancy, right? Short-term bounce puts everything above their short-term moving averages. But even with the last 2 days, we haven't recaptured a lot of the big damage that was done in the last 3 weeks. However, it still remains, even with the last 2 days, guys, even if you weren't able to clip the lows because you were too fearful, or maybe you just weren't here. A lot of stocks, objectively speaking, are still at fantastic valuations. Now, you're not picking the lows, but irrespective of the lows, guys, when the valuations are looked at, objectively speaking, a lot of stocks are still somewhat cheap. That indicator, only 33% of stocks above their 50-day, a percentage of stocks above their 200-day moving average, well, a lot of stocks are still significantly down. The SPY and the QQQ cleared above their 200-day moving average. We'll take a look at that in a few moments. But a lot of stocks are still well under 42%. Historically speaking, can we go lower? Absolutely, guys, but it's a good time to start buying and to DCA with a long-term time horizon, especially if you're not trading, right? If you're just building a long-term portfolio and you're somewhat of a passive investor, either in individual companies or ETFs, both are fine, right? To each their own. Well, it is still, objectively speaking, a very good time to be buying some of those dips. So that is your bit of a rotation recap, all sectors participating. Now let's jump right into the technical analysis, shall we? So in terms of the technical analysis, we were saying that we were looking for the daily uptrend, needed to breach last week's highs, and we did. Gap up open in a big fashion and clearing above the 200-day EMA and also the short-term 12 EMA, which we have not been above since this whole, catastrophe in the markets started happening initially. So the momentum definitely to the bulls right now. MACD on the daily is crossing. However, keep in mind, resistance is very close, 575, or right there up to about 585, this 10-point range. And I'll remind you, who is in control, right? Now that we got the daily uptrend back, that's step number one. The weekly damage is still done. We are still sitting in a weekly downtrend, meaning technically speaking, you are still in monthly consolidation. The monthly coming into the 12 very nicely for the month of March. That candle wraps up in just a few short days at the end of the week, most likely, or a bit further into next Monday. On the weekly, guys, weekly downtrend, you are looking for a lower high. Now, it depends on the size of the bounce by the bulls right now. You can see right now, the bounce size is only 38.2%. What that means is if you lose the daily uptrend right now and set a new daily downtrend, the weekly bounce size is very, very, very weak. It gives the bears more than enough chances to retest the lows or go lower. If the bulls can push at least to a 50 or 60% bounce, then we can talk about possibly recapturing an uptrend or forming some sort of tightening range as we move through this volatility. But step number one for the bulls is good, but we are not even close to being able to say, yeah, the market is on its way to full recovery. A lot of technical levels still need to be captured by those bulls, especially on the weekly timeframes. On the weekly time, on the QQQs right now, same concept. Beautiful daily uptrend closing above the 200 and closing above the 12. First close above the 12 since this whole event started happening in the first place. Resistance stays put above us, 493 up to roughly 500 psychological. That is that big weekly level that was tested as support many times before the bears finally broke it. That being said, same analysis as the SPY, guys. Look at the size of the bounce. This is a big loss of a weekly uptrend, yeah? So now the bulls need to get it back, but it takes a while to get those back. Measuring the size of the bounce overall, you can see that, well, it's not even a 35% bounce just yet. So that being said, if we were to lose the short-term daily uptrend immediately into resistance, and then you get rejected April 2nd, the market doesn't like it, and you get shot down in a daily downtrend, that would only be a 30% bounce and gives the bears more than enough opportunities to retest the lows or even go even lower. Essentially, what I'm saying is you do not have enough data to say, especially on the technicals, that the bulls are back in full control. Short-term control, yes, but on the time frames that matter the most, such as the weekly, not yet, and the monthly also still in its monthly consolidation phase overall. Moving on to the XLF right now. XLF, one of the healthiest bounces in the entire market. Daily downtrend. This is one single very large engulfing move. Well, not engulfing, but one single very large daily upswing move, yeah? So that being said, we have a lot of space off the lows, anything above 47.26, looking for a daily higher low to possibly obtain a daily trend change. If we just continue plowing to the upside, resistance is very close. 50.8 up to 51.36 is the mark. On the weekly, though, not looking too bad, right? We lost the weekly for a little while. We reacted nicely from support. Do we devolve into some form of a tightening range, or do the bears send us down a little bit further? Well, for that, we measure the size of the retracement, and the size of the retracement right now is quite good, over 50%. So now it's anybody's guess, right? You get a little bit higher, the probability skew to the bulls to recapture this. If you stop out right here, the bears have equal chances of retesting those lows. So just be patient on all financials names out there, guys. Try to find the best opportunities in the game and not chase things at the top of a rally. Onto the XLV healthcare sector right now. So XLV not really doing too poorly. The only problem is that we're right into resistance, guys. 149 down to about 146.50 is that zone. It's a very large area from the past. You can see how many times the bulls have had problems with this range. But overall, guys, in terms of the daily, still struggling to recapture a daily uptrend. The higher lows are now set, 145.79, right above the 200-day EMA. You break the highs of last Wednesday, or Thursday rather, you will get a new daily uptrend, and you can save this weekly uptrend that the bulls have built now for the past few months. Unfortunately, if you flush those lows, weekly downtrend, and you're coming right back down there. 140 down to about 133 is that area. Huge area of prior support, and that unfortunately would be fulfilling the prophecy of the infamous head and shoulder. So too soon to call it yet. If you really want the bulls to manifest a very large area of control, they need to break above 150, guys. Give me a daily uptrend, break above 150. I'll be able to close this box into the green area. The long setups for XLV come with a breakout, retest as support. That is the entry. This is the stop loss, and then you go for continuation. Guessing whether or not you're going to break it to the upside or not right now, guys, there's no trade. You need more confirmation signals. Moving into SMH. So SMH up 2.61% today. Very nice day for the SMH, and still battling out in this lower range of support. 233 down to roughly 219. That being said, on the daily, guys, daily uptrend is now set by the bulls. The higher lows are down here, 221.50. Daily high, low, higher high. We will see if they can continue. The 200-day EMA is right up there at about $237. If they can continue a bit more, they'll do wonders in trying to recapture a semblance of weekly control. As of right now, the weekly bears are still full in control of this chart, guys. Weekly downtrend, you are looking for a lower high. Now, where is that lower high going to be? Well, right now, the size of the bounce is only roughly 40%, not even at 50% just yet. So if they were to roll this over as of tomorrow and reset into some daily downtrends, you know that the likelihood of testing these lows is quite high. However, give me more of a bounce, capture 50, 60% retracement, recapture this support range overall, because now they're battling, but they haven't recaptured it. And then we can talk about maybe going back into somewhat of a tightening range, trapped between the overhead resistance and below support, or maybe even the ability to reset a weekly uptrend. Not enough data to call it just yet, but there was some fantastic opportunities at these lows on some of my favorite companies, namely AMD, NVIDIA, TSM, and a number of other semiconductor stocks, to say the least. Moving on to the IWM Russell. So the Russell benefiting, of course, from the, not recapture of the growth narrative, but just unwinding of some of the fears against the growth narrative, right? That being said, daily uptrend is underway right now by the bulls. MACD is crossed, showing positive short-term momentum. But keep in mind, we are literally into resistance right now. 208 up to about 217 is that zone of resistance. Sweeping weekly downtrend, you are looking eventually for a lower high. Now, if the bounce stops right here and we lose these daily uptrends immediately, the size of the bounce is not high enough to give the bulls a great chance of capturing that weekly uptrend back. Something like this, yeah? So far, only a 35% bounce. So if the bears roll over, the likelihoods of retesting these lows or lower are very high. If you want the bulls to have the best chance, you got to get back above 215. Get me back above 215, guys, and then we could talk about recapturing the weekly uptrend. But as of now, the bears are still in medium-term control, even though the short-term bulls look good and maybe want a little bit more expansion. We'll take these charts one day at a time, guys. All I can say is that down here, right, on all these indexes at the lows, they were phenomenal buying opportunities. If you're trying to chase the market now, you better have a long-term time horizon, because the short-term trades as of right now, you're getting in a little bit late, in my humble opinion. If you are going to try to trade these, right, even into resistance, trade with a stop loss, right? If you want to enter on the break of the new daily uptrend, the stop needs to go down below there, and you're targeting the most recent daily lower highs. Moving on to the Dow Jones, same concept. Beautiful, nice daily uptrend underway. The MACD is now crossing, showing positive momentum, and a cross above, there are close above the 200-day EMA and the 12 short-term, which has not been the case since the, market volatility all started, right? That being said, we are trying to break above this resistance area. 42,005 down to roughly 41,009 is that resistance range. You can see it was support for the bulls for a very long time. We broke through it, and now they're trying to claw back. It is still a weekly downtrend, and the bounce size as of now on the weeklies is not enough to give the bulls the best opportunity of resetting into a new weekly uptrend. As a matter of fact, the bounce size is only about 40%. So if these daily bulls lose everything from now and get the daily downtrend back to the bears, well, unfortunately, the bears have a very good chance of retesting the lows or lower. I'll remind you, the support area where we just left out from is still 41.2 down to 40,500. Same concept, SPY, QQQ, anything, guys. If you're playing these daily uptrend breaks for further weekly continuation into this bounce, you're counter trend trading number one. So that's why you have to trade with a stop loss, guys. The stops go below the daily lows, and you're always targeting the most recent daily highs. The risk to reward is not the most favorable right now. That's why I'm saying the trades are somewhat late if you've waited for confirmation overall, but there's nothing you can really do, right? That's just the market. Sometimes it just doesn't give the best risk to reward, especially if you're counter trend trading. Like all these trades, yeah? SPY, this is a counter trend trade. You have a weekly downtrend. You go long here, you're going into not only resistance, but a lot of bears too. Q's the same thing. This is a counter trend long right now. And all other sectors combined, for the most part, except for healthcare, are all counter trend trades. So with counter trend trades, trade with a stop loss, guys. The volatility is not over. We haven't lifted any major conditions just yet, yeah? Moving into the yields, well, the yields reacting positively to the upside in terms of yields because the fears of a recession have come down. Now, this trade, guys, is very complex, right? Some of it is tied into the dollar. Some of it is tied into inflation expectations. Some of it is tied into bond trade or speculation. Some of it is tied into recession odds overall. If I had to pick one of those that is moving these the most, it has to probably be the recession odds overall. All is not lost, though. We are still looking for the weekly lower highs and possibly lower lows as rates are in a cutting cycle right now. That's the 10, and the 20-year shows the exact same picture. But as I've been saying many times, guys, these yields in these bond trades, they move excessively slow. So if you're trying to buy bonds, it's not a bad time to buy bonds, especially not at a, 4% roughly yield on a lot of them, right? However, you need to factor in that it takes a lot of time for the bonds to respond to economic factors, but also odds of a recession, and also the Federal Reserve cuts, right? The Federal Reserve last week told us that they're staying firm roughly on their pace of interest rate cuts. Now, if you think that they're going to cut sooner because of odds of a recession, you would be speculating, right? If you're only going to follow their curve that's laid out, well, this trade is going to take a long time to play out. So make sure that if you are getting to this trade, you're factoring in that amount of time. Moving on to gold right now, which was a very hot trade when markets were coming down a lot. Now that we've had some bounces in equities, well, gold is slightly pulling back. That being said, who's in control? Daily uptrend, looking for a daily higher low. First area would be 29.90. The 12 EMA, the bulls have defended it a lot upon their multiple different rallies over the past year or so. The past, let's call it, if you go back in a year, yeah, but over the past, let's say since January, they've held the 12 pretty well. If they break through this, guys, no problem. We're looking for a retest down here, 2940 to 2900. That would be just looking for a weekly higher low. Maybe the 12 EMA is going to be up there as well, right? Confluence into support, breakout, retest, and maybe run. That's where I would be waiting and patiently waiting for a swing trade on gold. And now lastly, we'll take a look at Bitcoin. Bitcoin up nicely today. Same concept as the SPY and the QQQs, yeah? Now the daily bulls are in control. Daily uptrends are still underway. Higher lows are set. 83,000. If you get rejected from this resistance, which is 92.4 down to about 86.7, well, you're just looking for a higher low and just make further and further progress. Why do I say further and further progress? Well, because who's in control of these weeklies, guys? It is the weekly bears, yeah? And although the bounce looks good, objectively speaking, it's only a 50% bounce. If you lose this daily uptrend getting rejected from resistance and you lose the daily uptrend, the bears have a very good chance of retesting the lows or lower. If we're looking for any longs here, this is a counter trend setup, yeah? It's not a setup for a long. It's a setup for a short from resistance right now. If you want a long, what you need to see is a recapture of the resistance range, retest it as support, then the long entries go there, the stop loss goes there, and then you're targeting the all-time highs for that long duration swing trade overall, yeah? Most of these swing trade setups that I give, guys, are like weekly swing trade setups, right? Yeah, not like day trading setups. If not, I'd be using like the 15-minute and hourly charts. So keep that in mind. And the rest of crypto will only start moving higher if Bitcoin can really confirm those levels. You're seeing a lot of good gains on crypto today, but until Bitcoin reclaims that weekly uptrend and starts pushing higher, the damage on the altcoins will not be alleviated by that much overall, even though today is a nice 1 day's worth of bounce. Moving on to our big tech names now. Let's start off with Apple. So Apple up today about 1.13%. Not a bad day for the bulls on Apple overall, guys. And the bulls, as a matter of fact, they have now recaptured the daily uptrend, looking good, bouncing out of support, which was 220 down to roughly 210. Barely holding on to it on the weekly time frame. However, even though similar to all the other charts, even though the daily uptrend is nice, you have the MACD cross out of daily oversold conditions as well. Even though all that is nice, we're still below the 200-day EMA, and the bears have done their damage, right? This is a very large weekly downtrend. If you measure the size of the bounce on Apple right now, it is only roughly a 30% bounce, meaning if the bulls were to lose this daily uptrend and roll over from here, the likelihood of retesting the lows is very high, and maybe even just going for a lower high into a lower low is quite likely. So that being said, the longs right now, if you're trading with the stop loss has to be below 211, and you would be targeting the top end of resistance, which would be 232 up to roughly 239 on Apple. Still not my favorite of the stocks that have corrected recently because of their heightened valuation at about a 2.86 peg, only a 3% free cash flow yield, and only growing revenue at 5% per year. At the end of the day, of course, Apple is Apple. It's an integral part of the S&P 500. They do a ton of buybacks, a ton of free cash flow. Their margins are quite good, but you have to admit, right, the company is just not growing revenues as it once did, and the valuation is quite high. There are many other fantastic opportunities in the market right now at better valuations. But that being said, the Bulls, got to give it to them, they are playing some very good defense. Moving on to AMD right now. What happened here, guys? AMD is somehow up 7%. There must be a mistake. I've been saying this entire time. It's called Advanced Money Destroyer. It should only be going down. I'm just kidding, of course. The Bulls looking pretty good right now, guys. Nice little daily uptrend swing underway. This is one big move. So at this current time, the higher lows are still set down here. 97.22. We always had inside candles or no new lows altogether. That's why the higher low is down here. That being said, if we do fall off from here, guys, you're looking for a higher low. Anything above 97.22, higher low for possible daily uptrend continuation. Now, we are bouncing out of resistance, which is very good. 112 down to roughly 97, just peeking our heads above that zone overall. And I was kind of screaming at myself, because none of this is financial advice, to buy this stock down here, which we did, and now it's proving to be some very good purchases overall. The weekly MACD looks like after now, finally, 6 months of weekly downtrends, we might now actually be approaching the end of a downtrending cycle and give the Bulls a chance to see what they can do. On the weekly charts, it is a almost 100% engulfing move, which gives the Bulls a very good chance when you lose that daily uptrend, let's say, right, of resetting into maybe a weekly uptrend and then trying to go for a little bit of monthly expansion. Keep in mind, though, it's still a monthly downtrend. A lot of work to do, but if we get some monthly expansion here, maybe into the month of April, the next target would be overhead resistance 120 up to about 130. Now, I know what you're thinking. You might be saying, oh, I should have bought AMD. I probably can't buy it now. That's not true. If you have a long enough time horizon and you like AMD and you're going for the expansion thesis, it's still there. The stock right now is 113. It is literally still a 0.6 peg. They're still growing revenue and EPS. Nothing else has happened, guys. Sure, we're not picking the bottoms, but that's not to say they can't come again. So if I had to build a position on AMD, it would be slowly but surely at the lower end of the levels while the valuation is still cheap. And while the forecasts remain very strong for EPS expansion and very strong for revenue expansion over the next few years as well. Moving into Amazon right now. Amazon with a very, very beautiful bounce today. I apologize. I took some of my boxes off, so let me just put them back on. You can clearly, well, that box should be actually green. My bad. Let me just put it to a green little support box in support of the Bulls. So moving on further, guys, Amazon having a very nice bounce today. 3.59% to the upside. I was also screaming at myself to buy this one down here, which we did in a few different portfolios, and now we're getting a little bit of a bounce. I'm not saying that we can't just roll over, sure, but I like to buy here into support into daily oversold conditions, right? And now the MACD is finally crossing. So what the Bulls are trying to do right now is they're trying to get back the daily uptrend. This is a very nice one single bounce. Now we'll be looking for the higher lows, right? So now at this point, anything below above 189, let's call it 190, looking for a higher low for possible trend continuation or trend reset to the upside by the Bulls overall, closing above the 200 and above the 12 respectively too. But all that being said is nice, but who's in control here? Well, we lost the weekly uptrend a while ago, yeah? Now the Bulls have a lot of work to do to get it back. We will keep an eye on this bounce and see how it goes. As of right now, only a 23% bounce. So suffice to say, if the markets unravel and Amazon loses another daily upswing here and goes into a daily downtrend with only such a shallow bounce on the weekly, guys, what do you think is going to happen? Well, of course, we're going to retest this level and maybe go even lower, yeah? 191 to 184 is that support range. Still an area I love to play short puts in this area if I can at this current time, or even accumulate some shares. But if you're still looking to buy some shares and maybe you missed it, the valuation right now, even at 200, guys, it's like a 1.5, 1.55 peg. That is nothing. The valuation on a forward basis is still very cheap. And I'll remind you what Amazon is doing right now. They're improving EPS heavily over the next 4 years, and revenue just stays up and to the right. But this company is focusing on free cash flow, margin expansion, and EPS, which they've never done before. And they've also never bought back shares. I think in a few years, Amazon's going to be a monster of a buyback company, which is why I'm investing all I can at this current stage and will be investing currently as well, or in the future if we continue to correct on this stock. but nice bounce. Moving on to Google, also into its own respective nice bounce as well. Now, keep in mind, guys, we're looking for just this daily upswing pattern right now, and it's just a one daily upswing. Still need to reset the daily uptrend, though, well below the 200 EMA, which stands at 174, but the bulls are still in the support range. That is 175 down to about 162. We barely lost it. Now we're kind of getting it back, but same thing as Amazon, same thing as the rest of the markets, guys. The damage on the weekly is done. The weekly time frame is lost. So even though these bounces are nice, first things first, give me a daily uptrend. When you have the daily uptrend, then we can start measuring the size of the weekly bounce. As of now, it's still very weak. If the bulls roll over here, then of course we're going to retest the lows or maybe even lower. The lower box is 153 down to 140, which would be a fantastic buying opportunity for Google. Right now at 169, it's still a fantastic buying opportunity for Google, under a 20 on a forward price to earnings basis and a 1.23 peg, which is a very cheap valuation for a company with all those positive benefits, high net margins, high cloud growth, amazing free cash flow. They're still supply constrained on AI, so meaning they have a lot more demand than they can actually put out right now. And the fundamentals of this business are still fantastic. So I'm a big fan of buying Google for the long-term portfolio down here and playing some short puts as well under the most recent lows. Moving on to Meta having another good day, 3.79% to the upside, similar to the rest though. Still no new daily uptrend. The MACD though is looking nice for a cross after 1 month's worth of downside. Maybe time for the bulls to start getting to work a little bit, right? So that being said, daily downtrend was underway. This is the last leg of the daily downtrend. We have now engulfed 100%. Gives the bulls the best chance of resetting the daily uptrend. Anything above 575, which coincidentally is the 200-day EMA, and also in the range of support, 600, let's call it, down to about 560, looking very good for the bulls to have a chance, just a chance, at resetting into a daily uptrend and start to undo some of this weekly damage. And they got a lot of work to do, guys. Got to measure the size of the bounce, but so far, so good for Meta. Fantastic company. The valuation is not so cheap at 600 or above 600. It's about a 2 peg right now, which is not terrible, but still a little bit expensive for Meta. But the fundamentals of the business are operating on full cylinders right now, and still a company that I like a lot into the next 2, 3, 4 years. Into Microsoft at this current time, Microsoft unfortunately having one of the weakest bounces of the day, but it's Microsoft. It's not known to have these 4, 5, 6% rallies. Not all stocks can be as good as AMD. Guys, it's a joke, right? I'm just kidding, okay? So moving on in, guys, moving on in. Daily uptrend right now on Microsoft is confirmed, but we're coming into resistance. 410 down to about 393 is that huge level that they set for about a year's worth of time. So of course it's going to be tough for the bulls to get through this one without much of a fight from the bears, yeah? That being said, anything above 382, we'd just be looking for a higher low, gain more momentum, and try and smash through it again. Not looking too bad right now, but who's in control of the weekly? Well, you guessed it, the bears are still in control of the weekly. If we lose the daily uptrend from here, this size of a bounce, sorry, it must be very small for you guys, right? I don't want you guys to use binoculars to watch this video. So that being said, the size of the bounce is about a 38.2. If I can get a 50 or at best a 618, which would be 405 roughly, then we can talk about maybe, okay, that's a good size bounce. We've recaptured a lot of the resistance range. They maybe can use it a bit as support and go for the weekly uptrend shift. But as of right now, the bears still remain in full control. Fantastic company to be adding into your long-term portfolio. Even if the valuation always is a bit rich on Microsoft, it's such a solid company. It deserves that valuation because of the consistency of its earnings profile and how resilient its balance sheet is as well. It does a very good job of managing its debt versus free cash flow and cash on hand. Moving into Netflix right now, looking very good. Daily uptrend on Netflix simply continues, right? Nice higher lows, higher highs at this current stage, and above all of our moving averages, and also above the resistance range, which is now support, which is 935 down to about 900. All these guys from back there, they're now acting as support. Daily uptrend is nice, so any move lower, looking for a higher low, anything above 916. Higher low for possible further daily uptrend continuation. On the weekly, not looking too bad. Netflix did not lose, as opposed to a lot of its counterparts in the Mag 7, never lost the weekly higher lows, aka never lost the weekly uptrends. We will see the size of the bounce. I mean, the size of this retracement first, right, was a huge retracement, 80%. I would be very surprised. It's not impossible, but usually it does not V-shape after losing that much. Anything's possible, of course, but it's unlikely. The more likely scenario is maybe a 2-step recovery process at this current stage. Netflix, not a bad company out there. Swing trades, not many swing trades on this one right now. The levels are just not there for swing trades. But overall, for a long-term portfolio, even at 971, is it that bad of a deal? Well, it was a better deal at 860, but right here, it's about a 1.7 peg. Not terrible, but the forward PE and the peg are a little bit high. So if we are buying Netflix for the next, 4, 5, 10 plus years type of trade, we have to go small and we have to DCA, as we might just face a little bit more volatility in the next coming months. Moving on to NVIDIA right now. NVIDIA up 3.15%. Very decent showing from them, trying to go for the daily uptrend, closing just marginally above the 200-day moving average and the 26 and the 12 at the same time, recapturing the moving averages one after the other. That being said, if the bulls can get a little bit more on this, we're into resistance right away. 125 up to 135-ish is that resistance range. All these guys resistance, all these guys support. And who's in control right now? The weekly bears are still in control, yeah? So the size of this bounce overall on the weekly is not a bad bounce by any standards. It's about a 38.2% bounce, but it's not as if it was a 618 or a 782, yeah? Really what you need to see the bulls do is move their way into resistance, give me a larger weekly bounce, and then okay, then we have a lot of space between us and those lows at 103 to reset into a weekly uptrend. If they roll over the daily uptrend from here, guys, at only a 38.2% bounce on the weekly, well, the bears have a very good chance of rolling this one back over into support, which is 111 down to roughly 100. But fantastic. NVIDIA is roughly at one of its lowest valuations in the last few years, 1.1 on a forward price to earnings, and forward or 1.1 on a forward peg, which is PE divided by EPS growth rate, only a 25.3 on forward price to earnings. Quite cheap for this company. Moving on to Tesla right now. So Tesla up a whopping 12%. Short squeeze, reversal of sentiment amongst the brand, just no more people left to sell. Combination of all three, take your pick, guys. All that considered, it is up 11.93% today. Very healthy. We noticed that the bulls were kind of putting up a big fight here, right? At this support range, 220 down to 200, coming into it hard. And then they started playing defense a lot. And I was saying after Friday's video, looks like a good candle, yeah? If we can break these highs, which were 251, you have a good chance at some uptrend expansion. And uptrend on the daily, they are doing. Into resistance right now, though, 302 is the top end of that resistance range. And all the moving averages are sitting right there as well, right? 300 up to about 320. Who's still in control of the weekly, though? Still largely the weekly bears, right? That's a big move down. And although it has a 12% day to the upside, what's the size of the bounce, yeah? A 24% bounce. Even if you get to the top end, it's only a 38.2. If you stop the daily uptrend there, let's say you get to the highs of the range, right? Highs of the range, and you reverse into a daily downtrend, it's only going to be a 38% bounce. It gives the bears another shot, to the downside of either retesting these lows or lower. We'll see, though, can the bulls recapture the weekly uptrend? We should only be looking for longs, guys, if we have weekly uptrends. If not, we are counter trend trading, and we do not know when this landslide of bears is going to step back in to force us down, especially that we're into resistance. But very nice day for the bulls, right? Fantastic day for the bulls. In terms of swing trades longs, guys, I mean, you can't really do it, right? At this point in time, yeah, you have the daily uptrend at this point, right? But I mean, you're kind of playing with a little bit of fire right now. Can it work? Sure. You want to try your hand at it? Sure. But go excessively small, because at the end of the day, it is a counter trend trade. If anything, this is actually a setup for a short. Yeah, for further downside, top end of the range into the moving averages. You wait for a little bit of, 4-hour time frame exhaustion right here, overbought conditions, and then you wait for a loss of the hourly time frame. That's a short entry for this chart using the weekly as your possible guide. But we'll take this one day at a time, guys. Don't want to speculate too much, right? We'll give the bulls their day. They kind of desperately needed it. And myself as a long-term Tesla shareholder as well, guys, I don't have nearly as many shares as I did back in the day, but I'm still in this one for the long term. I still want to give them a chance. Moving on to Palantir. Nice day on Palantir, 6.37. We noticed it last week, guys, on Friday. Daily uptrend was underway, and now the bulls just pushing a little bit further. So if we do get, a slight little pullback, looking for a higher low, anything above 82, higher low for possible further trend continuation. Nice support below us, 84 down to 77 as well. And in terms of the weekly, well, Palantir, like Netflix, was one of the ones on this list that never lost the weekly uptrend, yeah? It's just that the retracement size was very, very, very steep, yeah? 78, 80% retracement. Normally, when you give back that much of a move, the likely scenario is not an all-time high, immediately V-shape. If the bulls are to approach all-time highs again, it will most likely be a two-step process, because that's a very, Very big move to recapture in one single shot. We'll take this one day at a time, though. The company at right now, $96, is still extremely overvalued. We did the valuation at 78, and I'm telling you guys this as a Palantir shareholder that bought most of my shares, a few years ago, and now I have an average cost basis of still like $11.80. If I'm telling you at 78 it's expensive, it's because it is. At 96, it's even more expensive, like a 6 peg and a forward price to sales of like 35, 40 forward price earnings. They're crazy. We know the company's growing well. We know it has many years of very good growth ahead of it, but how much are you willing to pay for that growth? That is the question that you should always be asking yourself. And lastly, into SOFI right now. SOFI coming back from the dead as well, right? SOFI getting a very nice daily uptrend. We had noticed this a few days prior. Yeah, daily uptrend was underway. Higher lows are set 11.79 and now approaching resistance 14 up to roughly $16. With that being said, any move lower looking for a higher low for further daily trend continuation if you get rejected at your first touch of that level. A lot of space between us and these lows to continue this daily uptrend. That being said, if ever we roll over and set the new daily downtrend, well, what's the size of the bounce? Because as right now, as with everything, the weekly bears control a weekly downtrend. So the size of the bounce right now is not so bad, guys. Almost a 50% retracement. If it can come all the way up to 14, it gives the bulls a 50% chance on any downswing to reset into a nice weekly uptrend and put an end to the infamous monthly consolidation that I've been talking about, guys. This was just looking for a monthly higher low. And I was saying, decent time to be averaging in a SOFI if you like the company, especially at the IPO prices, prior resistance, newfound support, and a monthly higher low setup for possible trend continuation. Not saying it's going to do this, yeah, the next 2 months, but for a longer term view, like 6, 12, 18 months to just accumulate was a very decent range. We'll see if we get back there, but as of right now, no trades for me, especially not swing trades into resistance, right? It's just not a good proposition, guys. As I said, it can work sometimes, but it's just not a good habit to build. You are late, and you have to admit that you are late. But long-term shares here, still very decent. We did the valuation at 13, still a 1 peg, very decent. Like if you want long-term shares, very decent proposition for SOFI if you like the company. And now I'll add 2 more to this list. Popular request by the comment section, guys. There's so many other stocks in the market, but on this list, I either do fan favorites or companies with very strong business models, right? Such as Uber and TSMC. So let's do Uber real quick, right? So Uber coming into, this was one of the swing trades that I alerted back here a few weeks ago on the channel and in the Discord as well. Hopefully you guys are able to make some good money on that one. Weekly uptrend is being maintained right now. Resistance stays put at 80, down to about $77. So we're coming into resistance. This is kind of the take profit zone if you had some swing trades from there, and they're battling it out. But that being said, the bulls with a lot of space, guys, anything above 70.4, higher low for possible second expansion, and maybe give us more weekly expansion into the highs as well. The monthlies are looking good, guys. It's been like a tight range for how long? For like a year, kind of like Microsoft, yeah? And the valuation right now, even at 76, is quite good. It's 10% higher than this, right? 1.1 peg, free cash flow yield of 5%. Very decent fundamentals for Uber. And now lastly, TSM. TSM, another one of my favorite companies. They have such a high competitive advantage of what they do. Daily uptrend is set above the 200-day EMA, but into resistance 183 to 193. That being said, any move lower, looking for a higher low, anything above 170.5. Higher low for possible further trend continuation. The weekly bounce is just getting started. You see the daily, the MACD crossing, positive momentum. The weekly momentum is just starting, but there's big overhead resistance, right? It's not a small one. It's actually a very big one that was utilized very often, right? Weekly downtrend is still to the bears. If it tops out here, retest the lows or lowers is highly likely. You really need to see them get above this resistance zone and then kind of reset into the uptrend. But we'll have a look, guys. Just pay special attention to how we react. 193 down to 182. And the fundamentals of TSMC, I mean, picture perfect, honestly. At 177, it's a 1.14 peg, a forward price to earnings of 19.20 right now, and a very good free cash flow yield. What more do you want when the company's earnings and growth profiles look like this? Geez, very nice EPS and very nice revenue expansion as well. Should be a very strong company into the next 2-3 years. So that is everything for your stock market rundown list. Hopefully you guys enjoyed that. For more trades, I always go over a ton of trades on the Friday videos at the end. We went over like 15, 20 different trades. And in the top 5 options video yesterday, we went over also like 15 different trade setups as well, right? So that's why today I'll only be covering the ones that are on this list. But now let's do a very, very brief recap of my portfolio and some of the trades made today. So before we get into the actual portfolio, I just want to show you some trades, just to recap the ones that I was talking about on Friday, because you won't see them here anymore. So a few of them that were closed today were, well, one of them, as a matter of fact, was, you guys remember I had a tiny little lottery trade on TSLL that we got for like 15 cents, and now we close it for a penny. So like almost 100% win right there. Very nice. And then we did some covered call rolls as well. I'll show you guys that in a bit. But we closed all the call debit spreads. Oh, I got to go all the way back down here. Close all the call debit spreads, as I said I would, on any bounce. We entered these a little bit early, like 2 weeks ago. They went down a little bit further, and now we get the bounce. So the entry was not ideal, but we closed them all at wins just to take some profits off the table, get the cash back, and move on to the wheel strategy. These were swing trades at oversold conditions, but I did not pick the lows, but still happy that we made some good profits on them. Closed AXP for like a 5% tiny little win right there. Amazon closed that one for 17.6%, and TSM closed that one for 15.5% as well. That being said, let's have a look at some of the account values right now. So you'll see this is the account. I'll go through all three because I haven't recapped them in a while. So this one, guys, it should be about 44,000 right now. But the problem is I moved 3K to the small long term that I'm building with you guys, that I promised I'd build with you on the channel. Yeah, I transferred 3K because Interactive Brokers, they hold, if you do it from a bank, they hold your cash for like 5 days. And I wanted to start last week. I moved 3K from this account because it's instant to the other one. Then I put it back from my bank. So in a few days, you'll see this one at 44,000. But the point here is, you know, because some of you are following my balance, right? So I figured I should explain. The point is, on a year-to-date performance, we're only down about 4.59. We started off the year very strong. We had some lottery plays that didn't turn out quite well, some NVIDIA calls, the SOFI calls, stuff like that. But overall, like, we've been farming premium with the wheel strategy, which is the backbone of this account, this entire time, and playing defense on some things that we were assigned. And now we're kind of out of it with a ton of buying power and still with a lot of long positions. So, you know, you've seen me draw down in the past few years a ton, and I still end off the years very strong. Overall, we've been through a number of different corrections in the past 2 years together on the channel. So you won't see the craziest home run profits from me, like how to take $100 and turn it into $1 million in 5 seconds. No. But what you will see from me is disciplined trading and very consistent trading and respecting a strategy. So if we get into the positions here, I'll just go over the new ones because we did a full recap on Friday. AMD, you remember I had these 2 call options. They're actually about $9 right now. I don't know why Interactive Brokers like says it's like 6. It's actually, they close close to $10 right now. So we're not down too much on these call options anymore, but I took advantage to it. Poor man's covered calls for May, 135. So we got about $1.85 for them. And we're up a little bit right now on them, not this much. Interactive Brokers is weird with the options prices in the after hours. I also wrote some AMZU covered calls against my assigned position, 36 calls for May, $2.65. I will show you my cost basis again, just to update you guys. So AMZU right there is, let's go have a look at it. Where is it? You guys see it? I'm scrolling too fast. Here it is. Covered call. The basis now is 36.41. So even though we got assigned at 42 with proper management of the position, even if we do get called away at 36, guys, it doesn't matter. We're only down 41 cents. We're essentially all covered up. Even if it goes down, we have some covered call premium to work with there. The other trades as well were just the ones that are in blue. Elf Beauty rolled this one again, this time stepping it up to from a 65 to a 66 call basis, 1 extra week, and I got about 78 cents in premium. Our cost basis on Elf right now, if called away at 66, is $59.91. So go for it. I got assigned at 71. I was able to bring my cost basis all the way down to $59.91. They want to call me away at 66. No problem. I'll walk away with like $600 and something. I got paid for my time, even though the stock is down from my assignment. That's what you do with the wheel, guys. You can bring your cost basis down with, you know, good covered call farming overall. The only other positions that I added to since the Friday that you guys may have seen, I rolled up the SOFIs from 13.5s. I had some 13.5 calls, rolled it up and out 1 week and 1 strike, went from the 13.5s to the 14s. And how much did we pay for those? We literally paid nothing. We paid like $1. So here's my cost basis on SOFI, $13.92. So next week, if it's around 14, I will roll them again. And you can see what it cost me right here. This one was in this section, I believe. We literally rolled them for a penny. It cost me nothing to roll up 1 strike and out 1 week. So that's the logic behind that trade overall. And I think that's pretty much it, guys, in terms of the new trades for today. So a bunch of trade closes. The buying power is now maxed. I have all buying power for more wheel trades. Oh, and we closed the SPLG. You remember I got assigned some SPLGs? So SPLG, we got assigned at 68, yeah? Our cost basis was just below that, about 67.37. What I did today, because the covered call premium wasn't the best for April and May, their monthly contracts, the premium was not the best, so I literally just closed the shares. I very rarely do this, but to get back my buying power, I don't know where this, this is one is in here probably. Just to get back my buying power, and because I was not finding the best premium on the Aprils nor the Mays, they only have monthly contracts, no weeklies, yeah? I closed the shares. My cost basis was like 67.38. I closed them for marginally higher, guys. We didn't make much money on this one, but it's fine. What we do get is we get $6,700 back, and I can play more volatile plays that offer more premium rather than just sitting in the SPY. My entry was not ideal, yeah? I had this 68 entry, which was here. I got some good premium for it, but then we end up wound all the way there. If I do play it again in the future, it will be patiently waiting for down there, because the SPY does not, this is just the S&P 500, yeah? The SPY does not give the best premium, so you really got to be diligent on your levels. That's why I did something I rarely do when I get assigned a position. I just closed the shares when I saw profit, just getting the capital back and getting ready for a next round of dips, maybe on some companies that have somewhat better volatility that I can get even weekly options on to write those short puts, yeah? That's pretty much everything for that portfolio. Now, this portfolio, which I promised to show you guys, is the new long-term portfolio. Now, this cash is just cleared, right? Now I have about 2,000 in cash, but these purchases were all made last week, right? So last week we put 800 into Amazon, 400 into AMD, 400 American Express, 400 ELF, 400 Google, 200 Microsoft, and 400 TSM. I'll do these very easily, yeah? AMD, the only reason I picked AMD over NVIDIA, it's very simple. Not that AMD is a better company, yeah? AMD's revenue and EPS profile is doing this. It's exploding. NVIDIA's has already done that. NVIDIA's revenue and EPS profile is like this. Which of the two companies would you choose if you had a small amount of capital and you're looking for velocity of share appreciation? Well, it stands to argue we'd have to do AMD, right? Amazon is Amazon. It's the highest weighted position. I've been over this one a few times with you guys. My favorite Mag 7 play for at least the next 3, 4, 5 years. It will remain an overweight position for me. American Express, just that American Express has more volatility than Visa and MasterCard, and arguably a better valuation too. It's only trading at a 1.28 peg. MasterCard and Visa trade very rich, and they don't move that fast either. And AXP is a 6% free cash flow yield, whereas Visa and MasterCard only have about a 2.5 and a 3, right? So the valuation is better. It moves a bit faster overall. It has the Buffett factor too. He's like 14% weight in that company. Anyways, Elf Beauty, very cheap company, and the velocity of any recovery is going to be quick. When you have a small portfolio, right, it serves no purpose to have 25 different stocks. Diversification is going to kill your growth. You want to be concentrated into some of the stocks that are cheap right now, but that may have the best velocity across their respective industry. Google, it's just because it's very, very cheap right now as well, and it's one of my favorite tech plays in the market. Microsoft, underweight right now because Microsoft is solid, but it doesn't move as fast as an Amazon or a Google does sometimes, right? You know what I mean? So Microsoft, I'll still have it. I'll build this position, but it will always be a bit of an underweight position, but I want to have that defensive nature in tech. And TSM, well, because it's very cheap, and at the end of the day, it's TSM. It's still one of my favorite semiconductor plays in the entire market, has one of the best competitive advantages you can ever find in any semiconductor play. I will be deploying this $2,000 just literally cleared at the end of the day today. So later this week, I'll be deploying it either equally or building some new positions as well. Position that I'll probably get into is also Melly. Melly is one of my favorite stocks in the market that I don't often talk about, but the growth profile and the valuation of this company are extremely, extremely, extremely attractive. It gives me that little bit of an edge for outside of the US. Like, look at this EPS growth profile. Ridiculous. Look at this revenue growth profile. Ridiculous, right? So I want to be in these types of stocks. I have this one in my large long-term portfolio that I don't show you guys, but I show the Discord members. Melly is going to be another ad, and I'll update you with the rest of the ads, but we're going to keep this portfolio concentrated. While it's small, 7, 8, 9, 10 companies maximum, and run a concentrated basis on that one. That's it for the small long-term that I'm building with you guys. I'll remind you, starting off with 5K, and then every week it'll have $150 US put into it, which mimics what you guys should be doing with every one of your paychecks, right? Maybe you can say that you can put less than me. That's fine, but just keep contributing on a weekly basis, yeah? And then this portfolio, which we haven't talked about in a while, this is the dumpster dive portfolio. Started it in August of 2024 when the markets had a similar correction. And I went for a bunch of beaten down companies. You can see all these companies, Baba, Carnival Cruise, Caesars, DG, Dollar General, Disney, Estee Lauder, Helen of Troy, Intel, Spirit Airlines, Triple M, Nike, Pfizer, PayPal, Papa John's, Rivian, Stanley Black & Decker, AT&T, UPS, Walgreens, right? This is Whirlpool and then Win, right? A lot of companies that were just beaten down. Here, I'll sort them by P&L so you can see which ones did the best and which ones are doing the worst. We don't have much. I said the next time the S&P corrects, a big correction, like 15, 20%, is the last time I'll put an extra $1,000 equally into these companies, and we'll let it ride. If you're curious about the performance over the last inception versus the benchmark, I was saying, is it a good proposition to build a portfolio with a bunch of just beaten down companies with questionable fundamentals sometimes? Can we beat the market over long term? Well, you can see it's gone either direction, right? But at least for now, we're beating the market. We're up about 5% in the last 1 year versus the S&P, which is only up about 1%. Well, not in the last 1 year, but since I started it, yeah, August, essentially, right? So that's the balance of the three portfolios. Hopefully you guys enjoyed that recap of the analysis and the portfolios. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new. Would love to have you back. We do these Monday to Friday after the close. And lastly, if you have any questions, please feel free to reach out down below. If you want any questions on anything, stocks, technical analysis, options, whatever you want, I'll do my best to give you my humble opinion without it being financial advice. And lastly, if you want access to all of our trades and have access to a community of almost 200 members, just like us, who are very disciplined and have consistent strategies to run the market, a lot of credit strategies like the wheel strategy as well, just farming passive income from the market, building long-term portfolios, taking leap call options when the market really presents the best opportunities, well, maybe the group might be for you. These are all the trades since the inception of the Discord. The green check marks are win. The red little circles are little losses. All in all, most of the trades are going to be for selling options, the wheel strategy, but we do call debit spreads, put credit spreads, leap call contracts, swing trades with shares, long-term portfolio discussions and building as well, and many, many other different styles of trading, whether you have a small account, medium account, or large account. There's really something in there for most people. We also do private morning live streams Monday to Friday for 2 hours after the open, where I trade live and take all your questions on your stocks and your options. You know, if you're not there, it's fine. They're all recorded. You can watch them after, and you can ask me all your questions in our chat rooms. We also do private videos in which I give advanced trading strategies that I don't really share on YouTube for small accounts, medium accounts, and large accounts especially. And our members have been finding tremendous value in those videos as well. How to grow small accounts, how to position different account sizes depending on what your account size is, your risk tolerance, different strategies for everybody there as well. And lastly, you also get access to all my charts. So all these watch lists and all the technical analysis, whenever you see these support resistance boxes, the same chart layouts, and all my annotations, whenever I have annotations on over 100 plus stocks from their earnings or otherwise, you can copy paste all that with a click of a button. Click of a button, you get all my watch list, all my charting as well with all the annotations. It's very easy to set up. So those are some of the perks of the Discord. If that sounds good to you, the link is always down below in the description. Hope to see you in there soon. And if not, I guess I'll see you back on the channel, guys. Take care. Pleasure as always. I'll see you tomorrow after the close. Have a great evening and peace.